So what do winning day traders do right? Before we look at the strategies, let's just put together some of the things that we found when we looked through the lens of a brokerage and got their data of what they do right. First of all, they'll focus on maybe a maximum of 5 to 6 products. Any more than that, that's just too easy to be distracted and lose attention. They'll trade about 2 to 3 hours a day. In other words, they'll only look at the screen a sum total maximum of 2 to 3 hours in a day. They're very often doing other things, which helps their trading in any event, because then they're not just getting frustrated and trading out of boredom. They will trade, obviously, as you would expect, long and short. The shorts tend to make profits quicker, we discovered, for them. They will trade not just currencies, but usually an index alongside that. The time frame that the day traders are looking at are 1-minute charts and maybe 5-minute charts as well. Those are their bread and butter. They might look at slightly longer term charts like a 1-day chart or 4-hour chart just to see where the longer term trend is, to get a context for their short term trading. They'll adopt only 1 or 2 strategies at a max, not lots and lots. That's because the human brain can't cope with more than that. For some of them, 80 to 90% were winning trades, but for the vast majority, that wasn't the case. But I'm just letting you know, for some of the 80 to 90% were winning trades, and you'll see some of the tactics adopted for that. Where 80 to 90% were winning trades, then the 10% of trades which were losing could sometimes be quite large losers. So balance that up with the amount you're winning against the number of times you're right. 52% of trades that they did were held for under 1 hour. 24% of trades were held for 1 to 6 hours, and they held under 10% of their positions overnight. So that gives you an idea that they don't want to be holding on for very long at all. And this was an analysis of all the data that we went through. Okay, so what do winning day traders do right then? Well, they have a maximum loss of around 5 times their average winning trade. That was the worst case. Most had average wins which were greater than average losses. Now you might say, wait a minute, how can you have a max loss which is a lot greater than the average winning trade? That's because those were the kinds of traders where they had a lot of wins. They took a lot of small wins, and the way they traded, and you'll see some of the strategies I'm going to show you, is that they would have the occasional big loser. But the big loser tended to be still maximized to, as described here, the maximum loss of around 5 times their average winning trade. That was an exception, of course, but I'm just showing the extreme day traders. The winners often took a lot of small wins and some very large losses, but very rarely did they take large risks in those losses. Again, I'll show you the money management for what the day traders were doing shortly. The account sizes were typically $7,000 to $20,000. That was 80% of the day traders. Obviously, the remaining 20% had more or less than this, and they did. And this was critical. A lot of very small size trades compared to their account size, very small size indeed. And that's often because, as you'll see in the trading strategies, they would scale into trades once the trade was in a winning position. They'd add to that position quickly. So that gave them room to do that without adding too much risk, but also because if they had losses, they wanted those losses to be minuscule compared to their overall account size. Cleverest thing they did, as I said, bet very small. 0.1% of their account per point on an index or currency was typical of the best day traders. Example, if they had a $20,000 account, they bet $20 for every point move in, let's say, sterling dollar. So essentially, for every pip that moved, they would make $20 or lose $20 if they had a $20,000 account. They were betting, in other words, 0.1% of their account per point is how they worked out their trading size. Why so small? Well, I've discussed that already in other lectures that I've given in this series. But to summarize, one of the reasons for betting so small is they'd open 3 to 5 positions at any one time in different products. So if they lost small because they terribly feared losses. And that's good. Typical products we saw the day traders trade, obviously all the currencies, but also other liquid securities like Apple or indices as well. And of course, gold. What time frames? Well, 1-minute charts. This is a typical chart. So each one of these individual bars representing just 1 minute, and that's the typical screen for a lot of day traders. What I will discuss in the next part is how do they then set up their screens and do all of this.